Hello and welcome. Tonight is the 12th of May, 2024. It's a Sunday night in Turkey. Where I am, we don't see the aurora lights, but I hope you are enjoying aurora lights if you're close to poles, northern pole. So here we are checking on other things, just entering spring in the northern hemisphere. Today, I like to mention you what are expecting us this week, coming week, which is tomorrow on Monday. The big calendar events, economic calendar events, are on the Tuesday and Wednesday of this week, mainly. Uh, we are expecting American uh, PPI, which is Producer Prices Index, and the next day, on Wednesday, we will be expecting CPI, Consumer Price Index, which means inflation figures. These numbers will be issued by Bureau of Labor Statistics. Well, although these numbers are heavily contested by some people, like the shadow stats, which measures inflation based on old baskets, they said you should multiply these numbers by two to reach the real level of inflation. But it's not even if we assume that we are trying to find exact inflation, it's impossible because everybody's inflation is different from each other. If you have a car, if you have a house, uh, if you have a child in a school where you pay tuition, your expenses are totally different from someone who is a renter and who doesn't have a children. So we cannot say that all are affected same. But there are also these tricks of adjusting inflation, and they are all done with naive and good intentions, of course. For example, just tonight, the news of the BLS, Bureau of Labor Statistics, came. They took out the coffee prices from the CPI, roasted coffee prices. Why? Because coffee prices rose extremely high, like cacao prices. So if something is increasing very fast, they better take it out. To play more games, they also made different definitions of inflation. One is core inflation. Well, why is it? What is core inflation? They take out the food and energy, and not much is left back besides housing, which is one third of inflation affected, which inflation affects in the all your expenses. So uh, basically, after core inflation, they are not satisfied. So Powell created another definition recently. This is uh, supercore inflation, which even takes out the house rental and everything, just leaves the services like haircuts and this and that, services industry to see if inflation is going down or up. But there are more features to inflation than just barber haircut prices and repair prices, because we know that inflation is defined based on government's request. It used to be defined as uh, expansion in the monetary supply of a country, which means printing money, basically. And after 1960, to accuse others, to point finger at others, they said it has nothing to do with government and people printing money. It's the increase in the price of items. Well, increase in price of items is a result of inflation, where you print a lot of money. So if you print twice as much money, Apple price will be twice as much, or it will reflect in time. So, but they rather not to be accused of printing money is they are the source of inflation, which they don't want to be seen like. They want to be seen like they are fighting inflation. On the opposite, they are creating inflation Then they are fighting inflation. Why are they creating inflation? Because it's not easy to collect taxes. And inflation is a hidden tax. For example, if I'm giving the privilege of you can print as much as money you want, but you should collect zero taxes. I will accept it because I can tax you by printing money anyway. So this helps two ways. I collect taxes by printing money. Besides, because I borrow money from, although nobody knows why, if a person has a printer at home to be able to print indefinite amounts of money, why would he print the money and then borrow it back? That's the part of the game. Because if he just prints the money and gives it out, inflation will start going exponentially. So what they do after printing the money, they want to adjust it to get back. So they are printing treasury bills to get the money they printed back from you, just to do some adjustment. So it's all a game, because if you hadn't printed a lot of money in the beginning, you wouldn't need treasury borrowing in the future. So this was just recently asked by a reporter to President Biden's, let's say, counselor, and he just went, oh, couldn't answer. Yes, government definitely prints money. Yes, government borrows money. So government prints and borrows money. So it was a very explanatory, answer for everyone. Basically, they must hide what they are doing, because what they do when they print money, they are also reducing the amount of loans that they took from you. This is a good example I use for buying a house on mortgage. If you have bought a house with a 2% mortgage and inflation went up to 6, 7, 8%, you are still, because it's a fixed loan, you are still paying 2%, whereas the house price, because the inflation went up 8, 9, 10%, is increasing by 8, 9, 10% due to inflation. So basically, the percentage of the loan will get smaller and smaller and smaller. You will also get a salary raise because of inflation. Maybe in the US it's 5%, 4%, just a little bit more salary than you used to get because there is inflation. So basically, it helps both ways. You increase your purchasing power, but your main loan on the house mortgage remains fixed. So this is very good in terms of uh, melting away your loans. So the government is doing the same. They are melting away the loans that they took back from people with treasury bills, so that instead of paying them, they just melt it away, because $10 next year will be like $8 of this year. So that way they are making money from their loans. I applied the same strategy in Turkey when I bought mortgages on houses, and I made huge amounts of money. Reason being, uh, in Turkey, inflation is a lot higher, like 70, 80%. So in just 1 or 2 years, the fixed loans I got from the banks are like, peanuts. You just pay them off easily any moment you want. So now, talking rather than understanding inflation, they are discussing and looking at prices of the items, which are not the reason. They are the result of printing money. So now today they will look on Monday producer price index, which is the inflation of the people who sell to consumers, their inflation. But before this month, they used to report consumer inflation first, and producer prices the next day. So they just change the dates oppositely. So what we are expecting after producer price being announced on Tuesday, These are short-term actions, but they are not maybe important, because in the end, if all gets to where the market expects, market is just expecting the interest rates to go down sometime this year, maybe once, maybe twice, only 0.25%. It's already between 5 and 5.50. So 0.25 is nothing you will even feel, But they are putting so much importance on it, so that will they decrease it twice, three times? Okay, while if everything is going good, inflation is coming down, why are you playing around with the inflation rates? Just, I mean, interest rates, just keep them like that. Well, that's not the real situation, because when the other banks bought 1 or 2% government bonds as a secure holdings, and because the new bonds are sold at 5%, 4.5%, the bonds that they have, which only gives 1%, 2%, became worthless, or let's say half as much as they do. So it writes $1,000 on them, but because they give so little interest for 20, 30 years, instead of, let's say, $1,000, they are now worth only $600. So when people rush to the bank to get their money, they don't have any money. They already lent it out. So they have to cash these reserve treasury bills to pay their customers. But when they do, they are in a big loss, because they cannot wait till the maturity of that bond, where they will receive $1,000, because there is still 10, 20 years to it. They just have to cash it in the market for $500, $600 at a very big loss that will show on their books as well. So that's why all small banks, most small banks, are in line to go bankrupt as this movie continues into the next year. So therefore, although Fed always says we will fight for the until we reduce the inflation to 2%. Why 2%? Why not 1.5? Why not 1? What is this Bible rule? 2%? It was New Zealand who first initiated this 2%, and it wasn't the target for them. It was opposite. If their inflation ever reached 2%, they should have fought with it. But here, the US took the same number as a number where they can bring it down, not under. Okay, that became a target. So, but nobody knows why 2%, why not 3%. So it's just a artificial target they are using, in essence. Anyway, we cannot change their decisions, but we must know the real reasons. So when we are investing, there is two ways: either you trust Fed, or you don't trust them at all. Or sometimes you trust them, sometimes you don't. Which paid off a lot in the past, because like lately, before they started 20 months ago, this interest hike, they were thinking inflation will be around 2 and 2.5%, and will never go up. And it ended up that very shortly, the inflation went up to 9%. So they lost all their credibility. Now they are trying to get back that credibility, targeting 2%. Probably once banks start failing quickly, the reason they like 2% is this: when another inflation, a deflationary recession hits the US, they want to start printing again. So to start printing again, you want to start from a smaller base. If you start from 4% and inflation continues or goes up, you must start printing above 4%, which will, like in the past, it happened. They reached 12% in 1970s interest rates in the USA. So that's why they are trying to bring it down as low as possible. Why? to print it again. So that's the only game they have, playing with interest rates and printing money. So that's what the reason the CPI and PPI are important. When they are announced in Turkish time, it's 15:30 hours in the afternoon. In the US, it's early in the morning before the stocks indices open. We will see uh, fast moves either up or down in markets, because if they are too far away from the expected expectations of the economies, either up or down, based on that, they will be affected a lot. If they are very close to the economics expectations, there will not be such a problem. Although we are talking about inflation and very strong US economy, the numbers we get from common people, from public, do not add up, let's say, because the each household in USA currently has $6,500 on their credit cards, which is extremely high interest rate, like 25% per annum. And the savings, average savings for all USA, some people it's minus, average is $8,500. So, and we know that since last 2 years, from 2021 to now, almost 2 years, a total of 1.3 trillion US dollars of the consumers is spent. It's finished. So, and we know that there are many job. Well, let me put it this way: the amount of people working is announced always high, because they are counting same person which takes 2 or 3 jobs at a restaurant, work during daytime at the cashier, working in different jobs. They are counting as 3 people. So that's why the numbers look very good when you look at the let's say company reports, that everyone says, I hired one person, I hired one, I hired one as well. So that's 3. But both 3 is the same person. And US economy for the consumers is in a very bad situation. You can check this from the market retail. For example, I saw that McDonald's started a new menu under $5, which means they want to address the people running out of money, and coffee prices are being down. So we know that in every population, including Turkey and USA, there is a very rich 10%, or let's say above average income 20% of the population. So this is similar for the USA. The 20% will still continue to drink their coffees and ordering bigger menu items from the burger stores. But the other 80%, which consists of the, let's say, poorer class of people, they have lost their purchasing power. So we are looking at this table with oranges and apples all mixed in one box. So we cannot say the prices are putting pressure on everyone. They are putting pressure on, much more pressure on poor people, and a lot less pressure on rich people. So recently, we know these numbers are affecting highly. The car prices have gone down because people are not purchasing as they used to. And so every indication shows the retail sales have dropped. But if they have dropped, Fed should act quick and start reducing interest rates. So they already did, not by decreasing interest rates, but they are, as you know, buying back bonds program. They reduced it from 90,000 to 45 million, 90 million to those amount, including the mortgage buying. So now they are releasing more money or not getting back as much money as they used to, which is also quantitative easing, sort of easing, or not compressing as fast. So um, they are observing this. They are not otherwise. Why don't you continue? Buying back same amount of bonds. So these things are all in macroeconomic level, which means high level economics. But for consumers, they must be guessing, because if they want to become jobless, or if they want to invest in something, if it's the right time, are the prices going to be going up, investment prices going down or up? These are the guessing information that a small investor needs. Should he buy stocks, or is there going to be a stock exchange collapse? Because someone watching the YouTube videos and listening to different people, you will hear both scenarios. Some saying the collapse is imminent very soon. On the other hand, you have people saying there's no problem, economy is flourishing. So everybody is getting mixed up. How should I invest in this environment? My advice is, I don't give investment advice, but I can give you general advice, which is always make a basket investment. So instead of investing heavily in stocks, you must hedge the problem of being, quick downfall, because when stock exchanges go down, they go down bad. I mean, like 40, 50%, you may lose half of your money. So you must have a way of hedging this. When your stocks fall, if they ever do collapse, something else should take its place, which is mainly like item like VIX, VIX, if you buy it in, again, paper terms, or you can buy some gold and sort of protect, because in such a collapse, gold will become valuable. That's why recently, with the news of recession, stagflation, all these terms, we are now seeing gold prices reaching the highest levels in many years. They reached slightly above $2,400 an ounce. I saw a Goldman expectation of $3,000. Nobody can give timing. They don't know much better than we do, but we know the things are headed that way. We cannot say this is going to happen in March, May, sell in May, buy in December, November, but we can say it's heading high. If you're looking for a monthly gain or loss, nobody can guarantee you. We are going through same things in Turkey. People are, most investors, they are calling people to invest in Turkish lira investment, because they are giving very high interest. But on the other hand, there is a chance of a devaluation, which nobody, of course, mentions. And if that happens, while you think you are making money in your local currency, you may lose half of your investments if a devaluation happens, like Egypt and Argentina. So again, best case is always making a basket of investments and not risking all at once. We are saying don't enter the creek with both feet, or the river with both feet, that you don't know the depth of. If you don't know the depth of the river, you just test the water depth with a stick with one foot. But if you just jump in, it may be too deep and you may get drowned. So similar for the markets. You must test it slowly, and you should be running back and forth if you need to. So this is by only making different opposing investments, When one fails badly, the other one gains money. Otherwise, you just take a big chance. Either one works or not. Uh, that's a uh, that's a very risky situation. Live or die situation for the investor. So uh, this depends on the type of investor, risk taker, or why take risks. Depends on your age, depends on how long you can wait. Because even if a stock market collapses, if you can wait long enough, 2 years, 3 years, it will get back there. But do you have such a patience? Because some people can't even wait 2 days, 3 days to see some gains. Like recently, gold reached its highest numbers. Right now, it's around 60, 70 US dollars below its highest record high. But most people are anxious. They say, okay, it's finished with gold. Whereas that doesn't happen. All prices go up, then they come down a bit to correct levels. If they don't continue going down, that means they are staying there. They are testing the waters. Then they would make another attack some other time. If they cannot do the attack, they will come back. So that's how it works. They don't go up straight in straight lines. That's only in a very high inflation countries. They seem to be making a lot of money nominally, but in reality, you are losing a lot of money because of the exchange rates. Anyway, I wish you all good night. This was just an explanation of this coming week. Those are the most important days, and we will have lots of Fed talkers, including Powell, this week. Those are the main issues. And roasted coffee is out of the CPI. That's a brand new news. Okay. See you all later on in another video. I make one like English every week or every 10 days. So this is just to improve the language abilities of the Turkish people in terms of economic terms. Okay. So otherwise, I don't intend to go international on these issues. In a local channel, I advise how to make money from savings and how to invest them in different mutual funds, houses, mortgage houses, and how to borrow and make money from borrowing. Such are, in general, my teachings. You will find similar videos in this channel as well. So I hope you all very good next week in May, the second half of May, let's say. See you and goodbye. Stay with Aurora.